Hello and welcome to Core Finance. I'm Matt Brown. I'm joined by Nicole Elliot, who is going to talk today about Euro Swiss.
Well, it's actually what not to do in the foreign exchange market. I mean, this is where I'm coming from.
Yes.
How there are certain things that you just, avoid.
Mm-hmm.
Don't even consider whatever, swipe to the right or whatever it is you've got to do. It's one of those.
So avoid this currency pair.
Exactly.
I think anyone who was trading it back in 2014 will tell you exactly that.
Yeah.
It was a widow maker. We can see on the chart the huge move when the S&B removed its peg, and what's going on now?
Well, now
coughing people back into this.
Well, what it is at the end of last week, in 4 days alone, this currency pair managed to lose 8.5%.
Mm-hmm.
Now, when the US dollar index lost 10% in 7 months,
Mm-hmm.
Euro Swiss, the Swiss franc lost against the euro 8.5% in 4 days. 4 days. This is fierce. This is really,
Yes.
really expensive. What we have here is a Swiss National Bank that is going to do whatever it takes, and they really mean whatever it takes, to get their currency under control,
Mm-hmm.
to try to help the nation.
Yes.
It's a big exporting nation. It's a very small nation. They are doing everything, and they currently the Swiss National Bank assets are 747 billion Swiss francs worth. That's up 100 billion from the year before. The bulk of that is in foreign currency, which is euros and US dollars.
Mm-hmm.
And in the US, they have an equity holding, as at the latest data I've seen, $63 billion worth of US equities they're sitting on.
Just a small amount.
Yeah, exactly. And they want a weaker Swiss franc. They want a weaker Swiss franc, and as I say, they've done so much to do so. I've got a feeling that we don't have that far to go, in that originally they had a cap at 1.2 Swiss francs per euro. They didn't want it to get the Swiss franc to get stronger than that, okay? And they had that there for a whole year or 18 months or something. I can't remember exactly. What we've got here, excluding that ridiculous spike at the bottom, is you have an A, B, C type correction, where at the moment C is exactly 61% of the height of A, taken from before we got so stupid, okay? So taken from 98 centimes rather than that thing at the bottom there. So that's A, B, C. Now, if they're very clever and quick-footed, they might get it up so that C is 100% of A, which would get you up to 1.2, which was the original
Yes, back to where
starting
we
point.
started, yeah.
And do you know what I'd be tempted to do? Buy an option. Go against them, but not in outright foreign exchange, definitely not in contracts for difference,
Yes.
and not with a lot of money at all, because this one is just too hot to handle.
Yeah, it's casino trading, isn't it? But options, probably the way to go if you can afford to lose your premium.
Correct.
Perfect. On that note, Nicole, thanks very much for coming on today.
Thank you.